If you are 65 or older, I need you to stop whatever you are doing and watch this entire video, because Congress passed a law that hands qualifying seniors an extra $6,000. And if you are married and your spouse is also 65 or older, that number doubles to $12,000, not a loan, not a program you have to apply for, not something you have to prove hardship to receive. A tax deduction, legal, permanent for the next 3 years, already on the books, already signed by the president. And the overwhelming majority of American retirees who qualify for it have never heard of it. Here is what makes this so extraordinary. This is not buried in a 900-page bill that nobody read. The IRS announced it officially. TurboTax knows about it. H&R Block knows about it. Your bank does not know about it. The evening news did not cover it. And the financial institutions that profit from your confusion certainly have no incentive to explain it to you. I am David Graves. I am a federally licensed enrolled agent with over 20 years of experience representing taxpayers directly in front of the IRS, and I am going to spend the next 25 minutes making sure you are not one of the millions of seniors who either missed this deduction entirely when they filed or who has no idea it exists going into this tax year. Because here's the part that keeps me up at night. This deduction expires in 2028. You have a 3-year window. Every month you do not understand, it is a month you are leaving money on the table that belongs to you and that Congress specifically decided you should keep. Stay with me. This one is worth every minute. I want to tell you about a client of mine. I am going to call her Barbara. Barbara is 71 years old. She spent 28 years as a registered nurse at a hospital outside of Columbus, Ohio. She retired at 64. She has a pension. She has a small Social Security check. She has a savings account. She is not wealthy. She is careful. She has been careful her whole life. Last February, Barbara sat down to file her 2025 taxes the same way she has done every year for the last 3 decades. She used the same tax preparation service she has used since 1997. She dropped off her documents, picked up her return 2 weeks later, signed at the bottom, and mailed the check. She owed $1,240. 6 weeks later, Barbara's neighbor, a retired accountant, mentioned something called the Senior Bonus Deduction over a cup of coffee. Barbara had never heard of it. Her neighbor walked her through the basics in about 10 minutes. Barbara went home and called my office. When I pulled up her return, the picture was clear immediately. Barbara was 71. She earned $64,000 in total income from her pension and Social Security. She filed as a single filer. She qualified for the full $6,000 senior bonus deduction without question. Her tax preparer, a service she had trusted for 28 years, had not claimed it. Not because they were dishonest, because the deduction was new, because it came from a bill that passed in July 2025, because the software some preparers use had not yet been updated, because the IRS announcement came out in late February 2026, because the information simply had not reached the person sitting across the desk from Barbara when she filed. We filed an amended return. Within about 10 weeks, Barbara received a refund check of $720. Her overpayment reversed. The money she had already sent to the IRS came back. $720 that was hers all along, that she earned, that she saved, that she planned for, and that almost disappeared permanently because nobody told her the rule had changed. Barbara told me something after she received that refund that I have not stopped thinking about. She said, "David, I spent my entire career making sure other people were taken care of. I just assumed someone was looking out for me too. I want this video to be that someone for you. To understand the $12,000 deduction, you need to understand where it came from, because understanding the source is what helps you trust that it is real, that it is legal, and that it is yours to claim." On July 4th, 2025, Independence Day, President Trump signed into law a sweeping piece of legislation officially called the One Big Beautiful Bill Act. It is an 870-page economic package that touches nearly every corner of the federal tax code. It extended Trump-era tax cuts. It raised standard deductions. It changed rules around tips, overtime, and business taxes. But buried inside that bill, and I use the word buried intentionally because almost no major news outlet explained it to regular retirees, is a provision that the bill's authors called the Senior Bonus Deduction. And that senior bonus deduction is the single most valuable new tax benefit for Americans over 65 that has been created in more than a decade. Here is exactly what it is. The senior bonus deduction, what it actually does. Starting with the 2025 tax year, meaning the taxes you filed this past spring and the taxes you will file in spring 2027, every American who is 65 or older can claim an additional deduction of up to $6,000 on their federal tax return. If you are married, filing jointly, and both you and your spouse are 65 or older, that deduction doubles to $12,000. This deduction does something that almost no other deduction in the tax code does. It works whether you take the standard deduction or whether you itemize. You do not have to choose. You do not have to restructure your finances. You do not have to sell anything, move anything, or convert anything. You simply claim it, and it stacks directly on top of the existing standard deduction and the existing additional deduction that seniors already receive for being over 65. Which means in 2026, a single filer over 65 can potentially shelter up to $23,750 of their income from federal tax before a single dollar is taxed. A married couple, both over 65, can potentially shelter up to $46,700. Think about what those numbers mean in practical terms. If you are a retiree living on a pension, Social Security, and modest savings withdrawals, a very significant portion of your income may now be completely tax-free, or taxed at a dramatically lower rate than it was 2 years ago. That is not a loophole. That is not aggressive tax planning. That is Congress deciding in writing, signed by the President, that Americans who have spent their lives working and paying taxes deserve to keep more of their money in retirement. Who qualifies? The exact rules. Now let me give you the specific qualifying criteria, because this is where people get confused and where mistakes get made. To claim the senior bonus deduction, you must meet 4 conditions. Condition 1. You must be 65 or older by December 31st of the tax year, not by April 15th when you file. By December 31st of the year the return covers. If you turned 65 on December 30th, 2025, you qualify for the full 2025 deduction. Condition 2. You must have a valid Social Security number and include it on your return. This is a requirement the IRS added specifically for this deduction. Your Social Security number must appear on the return in the designated place for this deduction to be processed correctly. Condition 3. If you are married and both spouses want to claim the deduction, you must file jointly. A married couple filing separately cannot each claim $6,000. You file together or you each give up part of the benefit. Condition 4. Your modified adjusted gross income must fall within the eligibility range. This is the one that catches people off guard, and this is the one I am going to spend extra time explaining, because this is where seniors accidentally disqualify themselves without realizing it. The income phase-out, the number you must know. The senior bonus deduction is not available to everyone at the full amount. It phases out as your income rises, and understanding exactly where that phase-out begins and ends could be worth thousands of dollars to you. For a single filer, the full $6,000 deduction is available if your modified adjusted gross income is $75,000 or less. Above $75,000, the deduction begins to shrink. It phases out completely at $175,000. For married couples filing jointly, the full $12,000 deduction is available if your combined modified adjusted gross income is $150,000 or less. Above $150,000, the deduction begins to shrink. It phases out completely at $250,000. Now here is the critical question. What exactly is modified adjusted gross income, and how do you find yours? Modified adjusted gross income, MAGI for short, is essentially your total income from all sources before most deductions. For a typical retiree, it includes your Social Security benefits that are taxable, your pension income, your IRA or 401k withdrawals, your investment dividends and capital gains, any rental income, and any part-time work income. What it generally does not include is your Roth IRA distributions, your health savings account withdrawals for medical expenses, or most one-time life insurance payments. The fastest way to find your approximate MAGI is to look at line 11 of your most recent Form 1040. That is your adjusted gross income. For most retirees, MAGI is very close to that number. If your line 11 number is below $75,000 as a single filer or below $150,000 as a married couple, you most likely qualify for the full deduction and you should be claiming it right now. If your number is above those thresholds but below $175,000 or $250,000 respectively, you may qualify for a partial deduction, and it is absolutely worth calculating exactly how much. The one thing that surprises almost every retiree here is the piece of this that surprises almost every client I walk through this with, and it surprised Barbara too. Most retirees assume that because they already took the standard deduction when they filed, there is no room left for additional deductions. That assumption is wrong. The senior bonus deduction is specifically designed to stack on top of your standard deduction. The law was written this way intentionally. You take your normal standard deduction, the one every American takes, and then you take the additional $6,000 senior bonus on top of it. They are two separate lines, two separate deductions, both available at the same time. This is actually unusual in the tax code. Most large deductions force you to make a choice. This one does not. And that is precisely why the tax professionals who know about it describe it as one of the most straightforward tax wins for seniors that has been introduced in years. The 2028 expiration. Why this window matters. Before I move into the 5 scenarios, I need to make sure you understand one more thing about this deduction. It is temporary. The senior bonus deduction is available for tax years 2025, 2026, 2027, and 2028. After 2028, unless Congress extends it, it disappears. The deduction expires. The money goes back to the government. That means you have 3 tax years remaining where this benefit is available. 3 years to structure your retirement withdrawals, your Roth conversions, your Social Security timing, and your other income sources in a way that maximizes how much of this deduction you can claim every single year. The retirees who understand this window and plan around it over the next 3 years will keep significantly more of their money than the retirees who ignore it. The difference between planning and not planning around this deduction over 3 years for a married couple in a 22% tax bracket is potentially $7,900 or more in additional taxes saved. That is real money. That is a car. That is a year of medical expenses. That is a grandchild's tuition. That window is open right now. The question is whether you are going to use it. Let me walk you through 5 specific situations that represent the retirees I see most often. Because the rules sound simple until you get to the real-life version of them. And that is where people make mistakes. Scenario 1. The single retiree on a pension and Social Security. You are 68 years old, single. You receive a pension of $32,000 a year and Social Security of $22,000 a year, of which $18,700 is taxable based on your income level. Your total modified adjusted gross income is approximately $50,700. You are well under the $75,000 threshold. You qualify for the full $6,000 senior bonus deduction without question. If you are in the 12% federal tax bracket, which most retirees at this income level are, that $6,000 deduction saves you $720 in federal taxes. That is exactly what Barbara recovered when she filed her amended return. If you filed your 2025 taxes without claiming this deduction, you can file an amended return right now using IRS Form 1040-X. You have 3 years from the original filing deadline to amend. That window is still wide open. Scenario 2. The married couple, where both spouses are over 65. You are 72, your spouse is 69. You file jointly. Between your combined Social Security, a small pension, and modest IRA withdrawals, your total combined modified adjusted gross income is $118,000. You are under the $150,000 threshold for joint filers. Both of you are over 65. You filed jointly. You qualify for the full $12,000 senior bonus deduction. If you are in the 22% federal tax bracket, which a combined income of $118,000 likely places you in, that $12,000 deduction saves you $2,640 in federal taxes this year alone. Over 3 years, that is nearly $8,000. Did your tax preparer claim this deduction on your 2025 return? If you are not certain, Pull out your 1040 and look at the deduction section. If you do not see a line for the Senior Bonus Deduction, call your preparer this week. Scenario 3. The retiree right at the edge of the income limit. You are 74, single. Your income is $82,000. Your pension, Social Security, and the required minimum distribution your financial advisor told you to take last December. You are above the $75,000 threshold, but you are not disqualified. The deduction phases out gradually between $75,000 and $175,000. At $82,000, you are $7,000 into the phase-out range. You still qualify for a meaningful partial deduction. The exact calculation is complex and worth doing with a tax professional, but do not assume that because your income is above $75,000, you got nothing. Many retirees in the $75,000 to $120,000 range leave partial deductions unclaimed because they heard there was an income limit and assumed they were out. Partial is not nothing. Partial on a $6,000 deduction could still mean $300 to $500 in your pocket. Scenario 4. The married couple, where only one spouse is 65. You are 67. Your spouse is 63. You file jointly. Combined income is $95,000. Your spouse does not yet qualify. The deduction requires both spouses to be 65 or older for the full $12,000. But you qualify for your half. You can claim $6,000 based on your own eligibility. The mistake I see in this situation is couples who hear that the full deduction requires both spouses to be 65 and assume they get nothing at all. That is wrong. One qualifying spouse means $6,000. Two qualifying spouses means $12,000. Do not leave your half on the table because your spouse has not yet crossed the birthday threshold. Scenario 5. The retiree who already filed and thinks it is too late. You filed your 2025 taxes in March. You just watched this video. You are sitting there right now thinking, I missed it. It is done. That money is gone. It is not gone. The IRS allows you to amend a tax return using Form 1040-X for up to 3 years after the original filing deadline. The deadline for 2025 taxes was April 15, 2026. That means you have until April 15, 2029 to file an amended return and claim the senior bonus deduction you missed. The process is straightforward. You file Form 1040-X, show the original amounts, show the corrected amounts with the deduction added, calculate the difference in tax owed, and if you overpaid, which most people who missed this deduction did, the IRS sends you the refund. It can take 8 to 12 weeks to process an amended return. But the money comes back. Barbara's did. And so does every other client of mine who has gone through this process. Do not let the idea of paperwork stop you from recovering money that is legally yours. All right. Here are the 4 specific moves I want you to make within the next 7 days, not someday. This week. Move 1. Pull out your 2025 tax return and check one line. Go find your 2025 Form 1040 right now. If you do not have a paper copy, log into whatever software you used or call your preparer. Look at your adjusted gross income on line 11. If that number is under $75,000 as a single filer, or under $150,000 as a married couple filing jointly, and you are 65 or older, you most likely qualified for the Senior Bonus Deduction. Now look at your deduction section. If you do not see a line where $6,000 or $12,000 was claimed as a Senior Bonus Deduction, your return may not have included it. That single 5-minute check could be worth $720 to over $2,640 in refunded taxes depending on your bracket. Move 2. File an amended return. If you missed the deduction. If your return did not include the Senior Bonus Deduction, and you qualify, contact a tax professional this week about filing Form 1040-X. This is not complicated. It is not expensive. A simple amended return for this specific deduction typically costs between $150 and $300 at most tax preparation offices. And the refund you recover will almost certainly be larger than the cost of filing. If you used TurboTax, H&R Block, or another major software platform for your original return, you can often file the amended version directly through the same platform. Look for the option to amend your 2025 return. Do not wait. 3 years sounds like a long time. It is not. Amend now while the return is fresh, while your documents are accessible, and while the rules are exactly as I have described them today. Move 3. Plan your 2026 income to maximize the deduction. If you are still inside the 3-year window, and you are, because the deduction runs through tax year 2028, you have the opportunity to plan around it proactively for the years ahead. The goal is to manage your modified adjusted gross income so that you stay at or below the threshold that gives you the full deduction. There are several legal, straightforward ways to do this. If you are taking required minimum distributions, consider whether a qualified charitable distribution makes sense for part of that amount. A qualified charitable distribution allows you to direct up to $105,000 per year from your IRA directly to a qualifying charity. And that money does not count as taxable income, which means it does not push your MAGI higher. If you are considering a Roth conversion, be careful about the timing. A large Roth conversion in a single year can push your MAGI above the threshold and reduce or eliminate your senior bonus deduction for that year. Smaller conversions spread across multiple years may preserve the deduction while still accomplishing the conversion goal. If you have significant investment income, consider whether tax loss harvesting strategies with your financial advisor could help manage your MAGI in a given year. You do not need to make dramatic changes to your financial life to benefit from this planning. Small, deliberate income timing decisions made now can result in thousands of dollars of additional deduction value preserved over the next 3 years. Move 4. Tell one person you love about this video today. I am completely serious about this one. This is not a throwaway request at the end of a video. Think right now about one person in your life who is 65 or older, a parent, a sibling, a neighbor, a friend from church, someone who filed their taxes this spring and has no idea this deduction existed, someone who is sitting right now with a refund they never claimed. Send them this video. Today. Not next week. Today. Because the amended return window exists, but it requires action, and most people do not act unless someone they trust tells them they should. The 5 minutes it takes you to forward this video to one person could put hundreds of dollars back into their pocket. That is not a small thing. That is a car repair bill. That is a prescription copay for 6 months. That is a plane ticket to visit a grandchild. Be the person who tells them, because nobody else is going to. Let me end with the most important thing I have said in this entire video. This deduction expires in 2028, not someday, not eventually. In 2028. After that, unless Congress extends it, this benefit disappears, and every senior who did not take advantage of it during the window loses it forever. The retirees who understand this window, who check their 2025 return this week, who file the amended return if they missed it, who plan their 2026 income deliberately, those retirees are going to keep thousands of dollars more of their own money over the next 3 years. The retirees who watch this video and do nothing, who tell themselves they will look into it later, who assume their tax preparer already handled it, who figure it probably does not apply to them, those retirees are going to hand that money back to the government that they already paid taxes on once before. You worked for that money. You paid into the system your entire career. Congress looked at your situation and decided you had earned the right to keep more of it. The only question is whether you are going to claim what is already yours. I am David Graves, and that is exactly what this channel is here to help you do. If this video helped you, and I believe it did, hit the like button right now. That single click is what tells the algorithm to show this to more seniors who are sitting on an unclaimed deduction they do not even know exists. Subscribe if you have not already, because next week I am walking through 4 more deductions hidden inside the same one big beautiful bill that the majority of retirees are also missing. Not one of them is complicated. Every single one of them is real money. And right now in the comments below this video, I want you to answer one question. Did you know about the senior bonus deduction before you watch this? Just type yes or no. I read every single comment, and the answers you give me shape the videos I make for you next. I will see you in the next one.